Hi, I'm Frank Notaf, Chief Economist at Freddie Mac. Well, we've made it to the end of 2014, and I can think of no better time than now to take a look back and see what the industry's projections were a year ago for 2014 and how they all transpired. And not surprisingly, some projections were spot on, but there were also some that were wildly off. Let's look at 5 elements of those projections. Let's start first with mortgage originations. The projections showed that there would be a big decline in mortgage originations because of the dry up in refinance activity, and we would enter the first purchase money dominated origination market in 14 years. And indeed, that's exactly what happened. Originations were down 40% because of the fall off in refi, but purchase money accounted for more than half of all lending. We expect those types of trends to continue in 2015, with purchase money being even more dominant and increasing in volume, and yet overall originations declining about 8% because of less refi. Second element of the projections was a view on home values, and the consensus view was that home values and national indices would continue to rise, but at a slower pace than in 2013, and that's exactly what happened. For example, the Freddie Mac House Price Index slowed to a 5% appreciation rate from September 2013 to September 2014. Our view is that type of trend will continue in 2015. National indices will continue to appreciate in 2015, but at a slower pace. We're forecasting a 3% gain in our national index for 2015. Now third, let's take a look at the rental market. The rental market has been in a renaissance, leading the housing recovery. That was the expectation a year ago, that those trends would continue, and that's indeed exactly what happened. The rental apartment fundamentals continue to be very strong, and that's helped us support an increase in apartment building originations in 2014, and we expect apartment building originations to increase further in 2015 as the strong fundamentals in the rental market continue. But as I mentioned, all the projections were not spot on, and let's take a look at a couple that were wildly off. Projections a year ago were that home sales would rise in 2014 from about 5.5 million in 2013 upwards to maybe around 5.9 million in 2014. Well, that didn't happen, and there's a whole bunch of reasons for it. Some of it is the weak economy in the first part of the year, some of it's the polar vortex, and other factors. But what our expectation is for 2015 is that the economy will be a lot stronger. We're not expecting any wild weather shocks, and so we're anticipating that we'll see a growth in home sales by about 4% in 2015, placing home sales at 5.6 million, the highest level of home sales since 2007. Now finally, let's take a look at mortgage interest rates. All the projections were pretty consistent that the expectation was that mortgage rates would rise gradually over the course of 2014. Well, that didn't happen. In fact, the opposite happened. Rates started off high at the beginning of 2014, gradually came lower over the course of 2014. So we have the lowest rates for fixed rate mortgages in our weekly mortgage rate survey at the beginning of December. Now, I think these very low mortgage rates will continue at the early part of 2015, but as the economy and the housing market strengthens, we'll see upward pressure on mortgage rates. And I'm pretty confident a year from now, fixed rate mortgage rates will be above where they are right now. Still below 5% for 30-year fixed rate mortgages, but higher than they are now. So just to summarize, we expect stronger economy with growth about 3% for 2015. We expect mortgage rates to start the year really, really low, move a little bit higher over the course of 2015, and we expect home sales to be up 4% relative to last year, and home values in national indices up 3%. Thanks for your time. Have a great holiday season. See you next year.